Pretty straightforward, isn't it? The book is already selling. The book's already got a very, very substantial sell coming in. And obviously there was an opportunity to sell against that lean, which made some money and scratched out. And then there was an opportunity to sell against that lean and make some money and scratched out. So I just took it, took the trade. I didn't look at value. I didn't look at whether I wanted the short. I just took it so that I could show you what it is I'm showing you. So when you see that value divergence creeping into this, and you can see just how many buyers are on the book compared to where we were before. I mean, this is where we were before here on the deltas. Look at my extra delta we've got into that area against that top line price. Against that top line price, we've got almost twice the amount of delta. All of those buyers are possibly getting jammed. Now, as I said, it's not a value trade. I'm not saying that there's any value in this. What I'm saying is you've got to still be able to perfect this as a trading style as part of your process of learning when to really go after the big value trades for the sell. So there was a sell here and there was a sell here. They both made money. They both got into break-even stops. And regardless of what happens next, you're not going to lose any cash on it. And that's important. This is the locals. So this is purely the floor trade. Okay, so this is the floor trade here. It doesn't tell us that there is a commercial behind it. It doesn't tell us anything. It just tells us that this is simply a floor trade. And we can obviously start structuring this with a commercial activity. We can structure it with a commercial element as we get more successful, being able to trade with the floor narrative rather than against the floor narrative. Very easy to do, very easy to spot. Levels, big divergences, should be crystal clear. And obviously it's up to you to then recognize that the trade is real. We recognize the trade is real by recognizing voltics or blocks. And then we lean against the trade and we make some monies. Simple, easy, effective, and really, you know, it takes a fraction of a second to spot it. All you've got to be able to draw is a straight line. I'll give you an example of a buy trade that was earlier on in the same contract, the same oil contract. I'll give you an example of a buy trade. See if you can spot it. See how easy it is to spot these trades. Can anybody see the buy trade? We're looking for a bottom edge. We're looking for volume. We're looking for a block, or we're looking for a voltic. Well, there's the bottom edge. We can see where the bottom edge. So the price action, the book was bearish. There's the bottom edge forming right there. So we can all recognize the bottom edge forms right there. We're now expecting it to be below that price. We can see the book then goes bullish off of that price. There's your trade right there. There it is, right there, that 41 right there. Because the book, well, the book was still dropping at that stage, Tim. The book was still dropping at that stage. It doesn't change until here. That's when we get the book advantage. So it doesn't change until it turns off the 92. So the trade is this 41 print right there, and it's a very easy profit on that deal. A very easy profit on that deal. Once it's visible, it's got to be visible because it can turn in a sixpence, remember. This is why we've got to be able to draw a straight line against a diagonal. We've got to know that the book is in our favor so that the book can't just suddenly pour in a sell. It can still do it, but the chances are it's unlikely to do it, isn't it? The chances are it's unlikely because we've got enough space to operate inside the book. If we run out of space, well, then it's tough. Makes it a lot tougher. So we've got to be able to draw a diagonal. The same way as we drew a diagonal here, we've got to be able to recognize that there's difference between the way that the book is now, and if it's dropping down like it was here, that's not a trade. This is a trade here. That's a trade. That's the one you want, and sure enough, easy profits to the upside as a floor trade. We'll maybe have a chance to look at some of these floor trades. Maybe have a chance to look at some of these floor trades on the S&P or the NASDAQ this afternoon for anybody to try and recognize or spot. And the idea is that you should know, you should only be able to take one side of the trade. Every floor trade should be one-sided. So the floor trade should nearly all be sells for a period, or the floor trade should nearly always be buys for a period. It's up to us to recognize what environment are we in terms of those floor trade narratives. So we can get that from how the delta is behaving, or we can get that from how the floor actually genuinely is behaving in those environments as well. So you can see at the moment, for example, in the ZB contract, everybody's buying treasuries down into the 20s. Well, if everybody's buying treasuries down into the 20s, so should you be. Yeah. Now, whether you like it or not, that's what the floor trade would be, is to buy treasuries into the 20 print on the ZB contract. That's what's visible. That's what you're seeing. That's what you'd be trying to think about. Now, I don't like that trade at 20s because I see the 2.5s very, very, very much as a bearish trade. And I'm more inclined to try and sell into higher prices, but I've not got a higher price. So for me, treasuries are off the table for me just now. I'm not involved in treasuries, not interested in treasuries. It seems as if they're trying to buy it back up again to take it back up to 154s. And for me, that's not the trade I want to be on. So I'm quite happy to be on the sidelines looking in from a distance and saying, well, over to you guys. You do what you like. I'm not going to be involved in it. Doesn't stack up for me. So I'm quite happy to pass on to somebody else the opportunity. Pretty easy stuff.